Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com. And, man, what another day. March Madness it's going to continue through every last day of this month. And today is Believe in Fantasy. That is what's happening in the paper markets today. News was breaking. Oh, yeah, Russia and Ukraine, there's going to be peace. Well, unfortunately, nothing could be further from the truth. The Russians got a little smarter. They've backed off of Kiev. They weren't going to be able to take the city. They've actually been pulling back from Kiev for about 4 or 5 days now. And you saw articles yesterday. I wasn't paying enough attention. But yesterday after I got off the show, you saw these articles. Oh, Ukraine takes back key suburbs and all this stuff, and Russia's on the run. Well, it was all by design. And again, this thing isn't going anywhere. Matter of fact, it took, I want to say it was the State Department this morning. I guess they saw all the headlines, and they had to come out and say, okay, calm down. Right? Russia's not giving up anything. They're just pulling back. And I find it nothing more interesting than a huge buying opportunity. If you can buy gold for under $2,300 an ounce, it's going to be a great day. And today you can buy it for even less than it was yesterday. Gold's off about $30 right now, 1910, 1911, back down to that support level. Crude oil still at 100, but crude oil is down like $5, and they're simply they don't want to face the reality. That's okay, because it doesn't change the reality. Matter of fact, today in the bond market, we got to pay attention. The 7-year note, the 5-year note, the 3-year note are now yielding more than the 10-year note. The 2-year note, we're about 1 basis point away, a little over 1 basis point away from being what the bond market would call fully inverted. No, I'm not talking about Tom Cruise and Goose flipping off a Russian pilot. No, that's not what I'm talking about. The bond market is saying, and this is a classic telltale sign that something is broken in the system, and the bond market is saying, hey, when this is all said and done, Jason, it's going to be ugly. And this is a typical Wall Street reaction. We're going to pretend that it's not happening, and we're going to pretend that this fake narrative is somehow playing out when it actually isn't.
Yeah, that's right, Joe. I mean, from the White House, it's democracy versus autocracy. He said it many times, and he said this before the Russian war with Ukraine. And now recently, it's from the White House. After Biden babbles on, and sort of says the same thing. He said this war will not be between democracy and autocracy. Will not be weeks or months. He just flat said it, and in the press briefings. Will not be weeks or months, this war of autocracy versus democracy. So, and then inverted. Didn't we hit inverted yield curve sometime yesterday for a little while, Joe, or we're still kind of on the balance?
Well, and again, so every time we see a lot of headlines. So the first time we saw an inversion headline, it was the 7-year note. The next time it was the 5-year note. Yesterday, it was the 3-year note. So that 2-year note now. Any day now. Matter of fact, here's the funny part: the 10-year note's at 2.44 now, and of course Jay Powell's already on record of, listen, we're going to get 50 basis points at the next meeting, 50 basis points at the following meeting. But again, with the bond market, when it does this, what does it mean? That shorter term yields paying you more than longer term. In other words, the bond market is saying right now, 3 years from now, 5 years from now, 7 years from now, there's going to be a lot of trouble. And I have a feeling that whether it's the end of this week, next week, the 2-year note is going to say the same thing. I think trouble is brewing. This is an overinflated market, and by all accounts, created by hyper, ultra loose monetary policy. Let's call it idiocracy policy. And again, we can argue whether it's by design or not, but the realities are, it's just another guarantee that the digital currency is coming. By the way, conference board stuff, again, the Wall Street watches this stuff. Future expectations. So how's the future looking? Is now the lowest since February of 2014, and really is getting awfully close now to where we were in 2007, 2008, 2009. These are very, very accurate predictors, especially when it comes to the bond market, as to what's going to happen. So we're not quite fully inverted yet. Full inversion, you got to get the 2-year note to yield more than the 10-year note. But yesterday it was the 3-year note that now has fully inverted. So we got one thing left to go. And if you don't think so, listen, I'm going to tell you right now. Apparently, what Saudi Arabia has been saying the last several days, the market just doesn't care. I'm going to tell you right now, it better start, because there's more bad news for them in food prices. Fertilizer, new all-time record highs. I'll tell you all about it next. 800-951-0592. I'm going to cover about 4 or 5 things really quickly as again, the inflation issue. I know that, Wall Street wants to be on Fantasyland. That's okay. That's great. They've been on Fantasyland for a long time. I mean, all we need is Mr. Rourke and Tattoo will be all set, right? I mean, maybe we could have, Will Smith give some bitch slaps out there, and get them all. But eventually, none of the issues are going away anytime soon. And matter of fact, I've got a bad feeling next week is going to take a dark, dark turn. Russia has more bond payments due, and if the EU is not going to pay for gas and rubles, all you know what is going to break out. But very quickly, General Motors saying, yeah, that chip supply problem, that problem that was supposed to be over, almost 2 years ago now, apparently not over. They are closing their plant in Fort Wayne, Indiana, for the next 2 weeks, the first 2 weeks of April, saying that the plant was running 3 shifts a day. So here's a plant running 24 hours a day. Chevy Silverados, GMC Sierra pickup trucks, saying that they have run out of chips again, and they're going to be shutting for the next several weeks. Morgan Stanley says soaring lithium prices, which, by the way, hit a new all-time record high. Lithium carbonate now $74,000 a ton. And to give you perspective, in August of last year, so that's not that long ago, 6 months ago, lithium was $12,000 per ton. It's now a new record high of $74,000 per ton. Of course, lithium, one of the major components for all of these electric vehicles. And of course, the lithium battery, which prices have declined on lithium batteries for probably the last 10 years as they've, gotten better at making them. All of a sudden now has reversed course. Tesla has already raised vehicle prices twice in the last month. And of course, the 2 big components, lithium and nickel, which we already know nickel hitting all-time record highs. Cotton. Yes, cotton futures continuing to soar, up almost 10% in the last 3 trading sessions alone, and saying now the cost of clothing is going to be rising all through the summer and winter. They're saying the price of cotton still has a long way to go. They're saying cotton's probably going to rise another 40 to 50% before it's all over. But Jason, the big news of the day, fertilizer prices. They've risen another 43%. This is nitrogen fertilizer ammonia, now $1,625 per metric ton. That is now an all-time record high. By the way, this index that trades fertilizer has been around for just 30 years or so, Jason.
Yeah, that's going to be a big problem. We've been talking about food shortages, and that's going to make that much worse. And here's the thing: is this year is supposed to be pretty bad, but what's going to happen by next year? It's all about what's going to happen next year. So, and I want to go back to cars just for a minute. Some of these car dealerships, here's some of the stuff they're doing, Joe, in this inflated cycle, because sticker price for new cars is a problem because the manufacturer sends it out there, and there's not much these car dealers can do. And there's 2 things they're doing, Joe. They're offering brand new cars for last year's or 2 years ago price. Some of these cars are coming to the dealership with half of their electronics not working. And the idea is you can bring it back to the dealership in a year or 2 and pay for all the your stuff to be turned on, because the chips will then will be put inside. So like if you have the wireless phone charger, well, the chips aren't available for that. So you buy the truck, no wireless phone charger, some of these other things aren't working because the chips aren't ready. But you can bring it back in, and then, of course, you end up paying the higher price. The other thing they're doing, Joe, which is crazy, you get 2 guys from 2 different dealerships, and they know they can sell this SUV for like 60 or 70 grand, but their sticker says 50. Well, one car dealership guy sells it to the other car dealership guy for the 50, and then he sells it back for 52. Now it's a used car, and the dealer that sold it for 50 and got it back, he can sell for 60 or 70, and that big markup because it's a used car, Joe. These are the things that are going on with cars. It's insane.
Yeah, and I mean the whole thing is just nuts. And now fertilizer,
man.
Just to give you perspective on food, fertilizer prices go back to the 90s, almost without exception. Now, there's a few cases. Remember in 2008 we had that big spike in oil. And there was another spike in oil. It was like 2013 or 2014. Not as big as the 2008 spike.
Right.
But you throw out the spikes. Because the spikes, they never lasted very long. Until now. You were talking fertilizer prices 1995, 2000, 2005, 2010, 2015, 2020. It's a lot of years. That's like 25 years where the fertilizer price was about $200 a ton. And there would be moments in there outside of spikes. You could get to 400 a ton. That was, and again, not for very long. We're now talking about $1,625 a ton. That is 800% higher. That's not 5% or 10% or 20%. That is 800%. And again, if you've been listening to this show at all, obviously fertilizer, the biggest of the price spikes, but as our wheat farmer from Kansas was telling us, everything from Roundup to tractor parts to combines is absolutely through the roof. And this is going to be the big problem. And again, a couple of 50 basis point rate hikes, Jason, don't fix this problem.
That's right. We covered it last year when China was buying massive amounts of grain, just storing tons and tons of grain. kind of makes you think they were looking at this a lot more seriously in a timely fashion than we were. You know, as the Fed was ignoring inflation, China was buying grain like crazy. Fertilizer, another, you know, it's a storable item. You know, it's not like it goes bad immediately. So when things get economically bleak worldwide, hoarding happens. You know, they'll tell us not to hoard, Joe. Yeah, don't go to the store and hoard anything. Don't protect yourself long term. But these big governments and countries, they're doing it, Joe, and America is not.
Yeah, well, you know what? You bring up liquefied natural gas. China just in the last year has doubled the purchases of liquefied natural gas because I think they know what's coming and they're being prepared for it. How about, so I've been warning you about Saudi Arabia. By the way, I haven't confirmed it, but Zero Hedge is reporting it. The relationship with China and Saudi Arabia seeming to get closer and closer. And there's rumors out there now that both countries may be selling treasuries. We'll see. Again, that would be a precursor. Why would they sell treasuries? Because they're getting ready to trade oil in renminbis, and so they don't need those dollars. But Saudi Arabia was out today saying that they will likely be boosting oil prices in its main crude variety to a record high. So you sit there, you know, right now oil's $102 today. And down, listen, the last 2 days crude oil is down like $13, all of it on fake news. None of it's true. Saudi Arabia is saying, hey, our primary blends of oil, and these are the oils that are the most easy to refine, not only are we not lowering the price, and again, once again, we don't care what the paper oil can say whatever it wants. We're going to raise our prices to all-time record highs. They're saying that Saudi Aramco officials say the selling price of its key Arab light crude is going to increase by $5 a barrel for May loading cargoes. The increase would bring the overall differential between the paper oil price to the actual oil price to almost $10 a barrel. And I'm going to say this, like I said, I've been doing this 20 years. I've never, ever seen anything like this.
Joe, it's interesting that you brought up treasuries right before you got into that. China's been selling U.S. treasuries in a high volume. You know, they're kind of selling to every one they're purchasing. They've been really liquidating. In Russia, they sold a bunch of their treasuries. They're almost treasury-free. But Saudi Arabia, the last couple of years, they're the ones that have been threatening it. They haven't really gone full into it. So why do I have the feeling that Russia, China is like, hey, if we can get Saudi Arabia to start dumping and we strike up an oil deal with them, you know, kind of game over, right?
Yeah, and this is something, again, and I've been making a big deal out of what's going on with the UAE and Saudi Arabia. Something isn't right. Yesterday, the UAE minister was out saying, hey, listen, OPEC doesn't get involved in politics, and essentially, hey, Joe Biden, stop asking us. We're going to do what's best for us and not what you want us to do, and there's no oil output hikes coming. Today, Saudi Aramco, Saudi's largest oil producer, you know, it's the big oil company there, says, hey, you know what, we're going a step further. You know, starting in May, so 1 month, because it's the 29th of March. We're a month away. Add another $5 a barrel above the paper price. That makes it $10 above paper price for our crude, and that's going to start in May. And again, that's going to be the prime, you know, kids get out of school, prime driving season. Don't be shocked. You thought 450, 460, 470 was a lot. Don't be shocked if that gets a lot closer to $6, Jason.
Yeah, if you follow California's prices, because that's where everybody follows too. I mean, there's some crazy prices in California for gas. So we're heading that direction. $6 a gallon gas it almost seems like it's assured by this summer, Joe.
You know, maybe there's something to this Saudi-China treasury thing.
Yes, there is.
Well, listen, this happened yesterday, and I didn't put it together until literally right as you were talking just 2 seconds ago. The Securities and Exchange Commission, the SEC, yesterday proposed 2 new rules that would force more trading firms to register as dealers and be a part of the U.S. Treasury market. Now, of course, the SEC puts a spin on it. Hey, we're going to make more firms register as dealers, so they got to open their books to us. I'll tell you what I think it really means. Is there a liquidity problem in the Treasury market? I can almost guarantee you there is. 800-951-0592. I got gold down 27, which is way off the lows here, 1913. I think Kitco's got it down like 8. But either way, the price is still the same. Buy this dip. This is fantasy land. This is, make-believe and fairy tales. This is a Disney movie. At the same time, warning signs are flashing everywhere. We talked about the inversion in the bond market. Go back to when we've seen these inversions in the past. 87. 2001, right? The tech bubble. The housing market crash. The financial crisis. Right? This is when we see these things happen. We briefly saw it when the Fed had to remember when the Fed was doing the quantitative tightening and then all of a sudden they had to stop. We saw it then as well. And it's doing it again, and it's a clear indicator of what you need to do. And you can always see gold always moves when these things come to fruition. And now this morning we're looking at, think about what we just talked about. OPEC, and primarily Saudi and UAE, said, you know what, not only are we not increasing production, which, again, to me argues they can't, right? Why wouldn't you at $100 and some a barrel just produce all you can? Which I think maybe they are. But not only are we going to work at lowering the price, we just raised it $10 above this. Whatever you say the paper price is, yeah, go add $10. That's what we're going to do. How about that? We talked about for at least the last week or two, right, Jason, about news about how China and Saudi Arabia may be all of a sudden working on selling oil in something other than dollars. Saudi Arabia has never done it since 1974. Saudi Arabia hasn't sold 1 barrel of oil for anything other than dollars. And now today, there's rumors that China and Saudi may actually be working together in selling treasuries. At the same time, yesterday, after the markets closed, the SEC proposed more new rules. And remember, these don't get voted on by Congress, right? We know the latest rule, right, is all has to do with the, the ESG crap. But now the SEC is looking to get more firms to have to register as dealers in the U.S. Treasury market. The head of the SEC says, I'm pleased to support this proposal because I believe it reflects Congress's statutory intent that firms engaging in important liquidity providing roles in the security market, which includes the U.S. Treasury market, must be registered with the commission. And essentially what they said was, well, we got all these high volume trades, they're calling them algorithm-based trades, which pretty much all Wall Street is. It's all computer trading. But those firms that have at least $25 billion of trading volume in the U.S. debt markets in at least 4 of the prior 6 months. So think about this. $25 billion is nothing. I mean, you're talking about the United States sells well over $1 trillion a month in debt because they got to roll over old debt. They've got to sell new debt. So a pretty small threshold. Firms that manage less than $50 million, that's pretty much, you're not even a firm anymore, are not subject to the new rules. They're saying that the big thing here is it's going to affect broader market liquidity, because what they're worried about, Jason, really simply put, we've seen it. I'll use nickel. Nickel's the biggest example. When markets become illiquid, all of a sudden, could you see Treasury yields, instead of jumping 1 or 2 basis points, actually jump 1 or 2 full points in a matter of minutes?
I think all that's possible, Joe. And Saudi Arabia's got to be thinking, if we're going to break our petrodollar deals with the United States, they want to make sure there's a soft landing, because they got to feel uneasy about moving in any direction, because it's not like Saudi Arabia has a whole lot of options besides oil, right?
Yeah, that is their economy, right? We all know that. And I think the biggest thing here is it seems like, and again, it adds up that the SEC, the Treasury markets, we've talked about Treasury market flows a lot in the past. They're starting to become illiquid. In other words, there's not enough buyers, period. And what happens when there's not enough buyers when we're talking about the bond market? Really simply put, rates go up. It's kind of funny what's happening in the mortgage market. I mean, the 10-year note is rising. Yeah, that's true. And rates are going higher. But now you're talking mortgages have now hit 5%. They're going up significantly higher than what the Treasury market has been doing. And again, Jason, I gotta believe, right, it's a liquidity problem. One of the biggest buyers of mortgage-backed securities was the Federal Reserve itself. And now that that buying's gone, these rates are starting to spike.
Right. It's kind of what happens when a Ponzi scheme starts to fail, Joe. There's just too much. There's just too much U.S. Treasuries out there and not enough demand for it, and so people are going to start. It's going to come back here. It's all that stuff's going to come back here. All those dollars are going to come back here, and that's why the inflation we see now. I just hate to say it, but it's just like nothing. I feel like by the end of this year, the rest of the country that's sort of trying to say, well, hey, ignore it, it'll go away. That they're not going to be able to ignore it anymore, Joe. That's what's getting ready to happen.
It's not going away. It's not going away. And again, I think the biggest news today, and of course you don't hear it, right? The only headline they wanted you to believe was somehow Russia and Ukraine were breaking through peace talks because Russia had pulled back from Kiev. And I'm telling you right now, there's been no progress there. All Russia's doing is, okay, man, we're getting, let's face it, they were getting their butts whooped because they were spread too thin. They're going to consolidate it all. The real news of the day came out of Saudi Arabia today, saying oil prices are going to be at new record highs, and we're going to help you out with a big price increase. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. $20 gold. These are 1 ounce pre-1933. And as you know, everybody out there that's ever listened to us, why do we like old gold better than bullion, better than the new gold, better than foreign gold, better than gold bars? The answer is really simple. It's the most private way to own gold. You can buy it, sell it, trade it. No 1099s from us whatsoever. You're kind of on your honor. And we think, especially with the digital currency coming, privacy is going to be the most important thing. 1 through 9. We're going to do a volume deal here. 1 through 9, 22.55. I mean, think about it. On Friday, we were at 23 and a quarter. Gold's off $48 from Friday's close. Not even really, maybe $46, but still, let's call it $50. It's all $50. This is what, $70 less than that. So you're gaining here. 10 through 19 at 22.45. If you buy 20 or more at 22.35, so almost $100 less than Friday on less than a $50 drop in gold. So $20 gold pieces 1 through 9, 22.55. 10 through 19, 22.45. 20 or more, 22.35. Very quickly, on the 2-year note is at 238. The 10-year note is down to 242. So we're almost about only a half a basis point away from the bond curve fully inverting. And again, this is the warning sign. When you sit there and you say, well, where are the warning signs? This is probably the biggest one of them all, when the bond market starts saying, hey, guess what? When we go fully inverted, that means the central bank has really screwed it up, Jason, and there's not a lot of alternatives other than, more than likely, it hasn't happened every single time, but almost every time this happens, recession comes within a year.
And the last time was, 2006, right?
Well, you had that. So the last time when you had these things, like I said, we had a brief inversion. It didn't last very long. It was very brief when the Fed had to save the Treasury market. What was that, 2019, right before the COVID problem? It did it for a second, but the Fed just came in with all this liquidity. But if you go back, 87, the tech crash, the housing bubble, then, of course, the financial crisis, every one of those instances, this is the same scenario that we got. And now this time around, Jason, it's doing it all over again. And this is exactly what I told you. We're going to have sky-high inflation. The Fed's going to be raising rates into a recession. And then I think, unfortunately, what the bond market is saying is we're in for a rough landing. And could we be, and I think it's going to be, this is going to be like the next Great Depression, worse than the financial crisis. And I think at that point, that's when everything changes in the digital money and the revamping of banks and all that stuff, Jason.
Right, and something that you can give a comparison to, because 2006, that's when things got really crazy in 2007, 2008, 2009 with that housing crash, and that was a bad one. Which has basically led to this one. What was the debt in 2006, and what was the inflation? Both those situations were much better. They weren't good. Who wants inflation or
yeah, but you think about, what was the debt? The debt was barely...
it wasn't even 10 trillion.
No, it wasn't even 10.
No, because...
Wasn't it 8 or 7?
Yeah, Obama came in, I think it was right at or around 10 trillion when Bush doubled it. And so, yeah, it was like 7 trillion, Joe, maybe 8. And the inflation was their regular little 2% by their number. Can you imagine how bad this thing is going to be this time with the inflation and the debt?
Yeah, you bring up some great points, right? So now the debt is 30-some trillion, right? Let's not count, and again, count the Fed's balance sheet because it counts. It's 40 trillion. Then on top of that, inflation. Forget about 2%. 5%. We've got double-digit inflation, and I don't expect that to end. Even while the economy, even now, right, there's a very, I would say it's a 50-50 chance that first quarter GDP could be negative this year. We could already be there and not know it while they're out saying, this is the strongest economy the world has ever seen. That's usually a good indication of things are about to end, isn't it, though, Jason?
That's right. I mean, everything we've been dealing with ever since even coronavirus, and in 2019 when the repo markets were falling apart, and you just mentioned it, the temporary inverted yield curve. Then it just feels like, Joe, they're trying to plug so many holes in the bucket, but the bucket's getting ready to explode, and they want to just time it in whatever time frame is convenient for them, right, Joe? And this war in Russia, by the way, it's almost like it has to be happening at this point in time, because you were talking about a percentage points in hours or in a couple of days instead of a tenth of a point or 0.2 of a point. You're talking about full percentage points in a crazy situation. Well, you got to have to have some really crazy emergencies ready and loaded for that, so that you have some cover, right, Joe? Like something blowing up in Ukraine.
Yeah, and again, I think that are we going to see a huge? I'm really worried it's an oil shock or Russia shuts the gas. If Russia shuts the gas off, I don't even want to think about that. But outside of that, the wrong drone, from Yemen hits the wrong place. A major hurricane here in the United States hits the wrong place, and all of a sudden we're living in a world I don't think most people are prepared to deal with. Patriot Radio News Hour. We're going to be back right after the break. 800-951-0592. Volume discounts here on $20 gold. Gold's down now $25. Again, I think it goes, like I said, $7, something like that. The price is the same, though. 1914, 1915 here. A close above 1920 would be fantastic today. Silver down 45 cents here, $24.70, and none of it matters. I mean, silver's turning, the oil market's now turning into the silver markets, where the spot silver price is completely irrelevant. Silver slowly rolling in. I think we're going to be caught up on most of our silver stuff at the end of this week, early next week. Metals plans, they're about done. They'll be totally done this week. Volume discounts on 20s today. I can't tell you right now, this is a gift. 1 through 9, $22.55. 10 through 19, $22.45. 20 or more if you have the means. What a great break this is. $22.35 at 800-951-0592. 10th ounce gold Eagles. We've had a $50 pullback. They're going to be $5 less today. $250. Buy 50 or more, a roll or more. They're going to be at $245. We're about 4 rolls left at this price, and then unfortunately our main source will be out. Then you got to go to the backup source, and we're looking at a price difference. It's kind of crazy. It's like $25 more. So 10th ounce gold Eagles been really, really popular, especially with the coming of digital money. $250. 50 or more, $245. So just great opportunities all over the place this week in the gold market, Jason.
Yeah. I mean, it never, it doesn't matter what's going on, coronavirus or the war in Ukraine, the inflation. It doesn't matter what's pushing gold up, and gold's going to continue to go up. It's never going to go up constantly, every single day, straight up. So there are times, which a lot of people, hey, I need to put this money together. You got your own finances, and then like, okay, I'm ready to buy. But sometimes you wait a day or you wait a couple of days. This is the day you're waiting for. This is kind of like the day you're waiting for when gold pulls back, to a support level, lower, higher lows. We've been seeing higher lows in gold. So when it does come back, it sort of bounces off of a higher level. And if you can cash in whatever it is you got that inheritance coming in or whatever it is, you can get 20 of these gold pieces at $22.35. It's a great way to buy in when $23.50 is the price that we're looking at in the near future, Joe.
Yeah, I'm just looking at some other headlines here. One of the biggest traders of junk bonds just dumped $3 billion out of the high-yield bond funds. By the way, this is the seventh straight decline in money available, this liquidity problem. Now, this isn't, this liquidity, this isn't the treasury market. This is the junk bond market that's going to push these spreads. And this is the problem here, because where does the trouble always lie? The trouble always lies in the riskier stuff. And unfortunately, because of what the Fed was doing, these risky companies were able to borrow money for next to nothing. And now all of a sudden, these yields are starting to explode. It's a lot of pressure on the house of cards. Relieve some of that with some gold today. 800-951-0592.